The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on here today? Well, futures were a little higher before we started the trading day. Of course, we had some nitwit decide to go up and blow himself up, and that kind of made everybody a little bit nervous. I think we'd be a little higher, maybe 5 points higher on the S&P cash. If that hadn't happened, pulled back to basically break even at the close to break even on the on futures at 9:30 when the bell struck. And I wonder who it struck for. Did it strike for you? Anyway, up 6 today on the S&P, Dow up 40, and the NASDAQ up 32. So we continue to see a lot of action, a lot of short squeezes. We'll talk about a few of those. Some very interesting news overall. And what else do we have? That's it's kind of getting it started here. It's been rather quiet other than that, and don't expect a lot of either news flow other than things like nitwits trying to blow themselves up. Between now and the end of the year, everybody's just counting the days like I am till they go on vacation. I'll be gone starting next Monday and come back the 3rd or 4th of January. Newsletters will continue. It's just I won't be spending an hour or two each day prepping for my show. And again, there's just not a lot of news. Good time to take off, recharge the batteries. In this case, I'll be out in California and be out at Stanford University. I'm going to be working with somebody on making models for financial markets. Actually, just kind of someone is willing to spend some time with me, and we'll look and see how those things do out. But I'll be out in California for a little while, if not a little longer, just north of San Francisco. So I'll probably have a nice Christmas out there. Anything else going on? Well, you know, you just want to look at the volumes each day. They're going to shrink. Probably have one good day, either Wednesday or Thursday this week for volume, but we just turned in 1.7 billion shares on the New York Stock Exchange, so don't expect a lot of juice. It's going to be, you know, if you put a trend line on it, it's going to be down pretty much in the last day or two of the year. It just doesn't get any better, and of course you fall off a bridge the last day or two. And what else? Well, we got the Fed on Wednesday. And I was reading Andy Heck's headlines, and all I could think of, he had something in there about the last meeting of the doves, and I thought, man, there should be a nice Yellen song about when doves cry. A little Prince song there, but that's just me. Let's get started into a little bit of history.
And it's all just a little bit of history repeating.
It is history repeating, and on this day, what happened? In 2008, financier. Is that what I am? I guess not. I'm just a trader, a lowly country trader. Financial Bernard Madoff, financier, Bernard Madoff, is arrested in his New York City apartment and charged with masterminding. I always wanted to be a mastermind of a long-running Ponzi scheme. I don't want to be that. A scheme later estimated to involve around $65 billion, making it one of the biggest investment frauds in Wall Street history. On March 12, 2009, Madoff pleads guilty to 11 felony counts against him, including securities frauds, money laundering, and perjury. On June 29th of that year, a federal district judge in Manhattan sentenced Madoff to 150 years behind bars, calling his actions extraordinarily evil. And of course, the son, one of his sons hung himself. The other one, I think, went to jail too. His wife barely skated out with the laundry and maybe a few plates. But they took all her cash too. Amazingly enough, there was some money in this thing. It wasn't totally empty, but it looks like maybe 40% on the dollar, which is a lot more than I thought that those folks would ever get. Yes, Mr. Petterfly, the inventor of high-frequency trading, long before it was cool. And what else do we have out here? I wanted to... Oh, I know what we had to do. Beyond that, Harry Markoulopoulos was an American former securities investment executive, an independent forensic accounting and financial fraud investigator. He discovered evidence over 9 years suggesting that Bernard Madoff's wealth was a Ponzi scheme. I've got a little recording of what he had to say, and it's very illustrative. We'll talk about what it means when we come back.
How long did it take you to figure out that there was something wrong?
It took me 5 minutes to know that it was a fraud. It took me another almost 4 hours of mathematical modeling to prove that it was a fraud.
What were the things that caught your attention?
It was the performance line. As we know, that markets go up and down, and his only went up. He had very few down months. Only 4% of the months were down months, and that would be equivalent to a baseball player in the major leagues batting .960 for a year. Clearly impossible. You would suspect cheating immediately.
Well, of course, he went to the SEC more than 5 times, gave his data to them. They all looked at the sun and were blinded by it and went back and took a nap, apparently, at the SEC. No one wants to know about it. Everybody apparently knew about it. Harry said he talked to over 200 people, of which 15 said that they knew it was a fraud, but no one wanted to actually, he said, when you live in glass houses, no one wants to throw stones. They were afraid that if they ratted out Mr. Madoff, that they would just get more oversight that they did not want. So they were more than willing to go a couple of years. And this brings us into what I want to talk about today, which is the bubble. I brought it up a little in the den earlier in the day. There is a fantastic book called A Short History of Financial Euphoria. I think we're pretty much solidly in bubble territory. And when you think about how these things continue to work, i.e. Ponzi schemes, they need a market that basically is going one way. We've had pretty much that. But you also need a lot of people willing to buy into literally just about anything. And of course, since they're making so much money, they must be smart. Therefore, it couldn't be a Ponzi scheme, could it? No, never could be. When we come back, I want to talk about bubbles and why, if you think that we're in a bubble with Bitcoin, we're only in about the second stage of a 9-stage process. We'll talk a little bit about this. We'll get into the charts. You can always call me at 877-927-6648. Email me at path@tfnn.com and put a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, in 2000, after the dot-com blow up, I spent most of 2001 reading every book I could on any kind of bubble that ever would come. Thank God I made it through alive. Didn't lose a lot of money. Actually made some fairly decent cash. But you've got to go through a couple of these things before you really understand them. And as they say on TV now, this is a extremely teachable moment because I think we are in a bubble. John Kenneth Galbraith, one of the financial advisors to John F. Kennedy, wrote a book in 1990 or 192 called A Short History of Financial Euphoria. And it is short. It's like 110 pages. I think I read it in less, or right around an hour. But find it highly illustrative. And, of course, he put together the steps of all bubbles. Inventors are declared geniuses every time for whatever they came up with. Does that sound like Bitcoin? Ah, they're geniuses. They're made the blockchain. After the initial run, additional leverage is encouraged and provided. And this is through every bubble that he could record from about the mid-1500s to now, by the way. Anyone that says the bubble is ready to burst is attacked, ridiculed. The bubble bursts. The public never blames itself for its greed. The geniuses are prosecuted, exiled, or killed. A recession or depression generally occurs that lasts years. Politicians pass new worthless laws. Does Dodd-Frank come to mind? A new generation comes along and it occurs again. And we have fairly short history minds in the market. Everybody thinks you're a party pooper. As I like to say, drop the Baby Ruth in the punch bowl. No one wants to see that. But if you look through those, we're only in number 2. Today is the first day that any kind of actual margin has been added. there is some minuscule amounts of margin and shorting that you could have done before today in Bitcoin. But today is the first time that you could get, that you could at least, what could you say, 40%, 50%, depending on who you talk to, for margin on the futures. So today is the first day that we're really encouraging and providing additional leverage. What we want to do is, and what you want to do is kind of write down every day how you feel. And remember when people really start screaming and saying the bubble's ready to burst and how they get attacked by everybody else. And then when the bubble bursts, because if you haven't really done this on a daily basis and gone through this, it's kind of like the difference between reading the history of a war and actually reading the newspapers every single day as it happens without knowing the outcome at the end of the war. Great book, great one to read. But if we're talking about bubbles, the addition of leverage is exactly what every one of these bubbles for the last, 500 years. Actually, I think he goes back in a change version back to 2000, back to just after 100 BC or something. That there was actually one of these things. They're not new. They depend on human foibles. And of course, it's always about adding that leverage. Of course, the .com leverage, you could have had 4 times leverage on stocks that literally had nothing. In the housing bubble, of course, you were selling houses to people that could not afford them, and everybody knew it. And the question now is if you're buying a Beanie Baby, which is actually something, or as several people actually said, you're buying a line item in a accounting book. That is what a Bitcoin is. It is a line item in an accounting book. So is it worth something? Is it not worth something? When is the day this blows up? Who knows? It does follow every kind of historical precedent for bubbles, but at the same time, we're only to number 2, and it's the first day of any significant encouraged leverage. So we'll see what we do about that. Somebody in the den, Al, says they've recovered 72% of the initial cash, not the $65 billion that he said he was worth, right? I think that's what it was. So actually, they've done a little bit better of recovering all that cash from items and other folks. But my guess is, or at least if I remember right, a lot of that cash came from people that should have known better and settled with the estate, if I'm not mistaken. Anyway, we'll get more into that as the week develops. But good time to start thinking deep thoughts about what's going on and knowing the condition that you are in the marketplace. As William Buffett always said, you can always tell who is not wearing a bathing suit when the tide goes out, whether it was 2000, 2008, or maybe 2018. When that tide goes out, you don't want to be there, the one standing there naked for all God to see. Give me a call at 877-927-6648. We'll start looking at some charts, and we'll start looking at some other ones. A lot of these stocks at resistance levels, and these are probably the weakest of the bunch, but they've made it back up here. So I've been watching how these have been working out. And again, I'm not going to short these going into Christmas, but man, these things start to whet my appetite if we do think that the market's going to turn south at the beginning of the year. Akamai Technologies, fairly interesting. We've been talking about this one for a few days as it goes against the October 25th high. That was at 56.85. Had 10 million shares. And of course, on Friday, you had 1.8 million shares at 57.12. So you've gone through it by a quarter. Wasn't able to hold it. You got a little doji out here. This may be as good as this one gets. Ideally, though, I love after you see the first drive like this one that fills most of the gap, you're going to have a fairly nice range. In this case, it's about $4 that's still left unfilled. I always like this thing to fill half the gap. That would take you to somewhere around 59 to $60. And that's where if all the volume falls out beginning of the year, that would be kind of what you're looking for to set up a fairly nice drive back down. This one and some of the others, what you're really looking for is what this has. You've got two big gap downs, right? Actually almost three out here, but the one's actually connected. You're looking in one gap up, and that gap up is from $40 to almost $45. My guess is this is going to make one more run and come down to this $40 to $45 range and fill this giant gap that comes back down to, what is this, February 10th of 2016. So let's keep an eye on that one. There are a handful of these things, if you are feeling rather bearish and wish to wait until the beginning of the year, that I think we're lining up. You want to be watching now. We'll look at a few others when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Look at a few other things. I did have some email during the break. And yes, beyond that, everybody has got a wonderful Madoff story. But yeah, it is kind of interesting that for him to make the kind of money he was saying he was going to making, he would have had to own twice as many options as actually were even totally available, the total float of options in the S&P. Yet of the 200 people that Harry interviewed, not one of them had ever traded with Madoff ever. So this guy was trading twice as many options as available, and yet no one ever traded with him at all. Kind of a red flag, don't you think? Other email out here was about Friday's conversation with Tom O'Brien. We were talking about the tech guys being over in China and talking, and why it's nothing new to find corporations doing kind of shady business. Nothing new in that. What was so glaring was the fact that they were willing to go up on stage and say that they would do anything that violated probably anybody's basic human rights if they could get into China and make some dough. And like I said, not uncommon to see people do that in the dark shadows in the alleyways, but to actually get up on a stage and prostrate oneself, one of the few times that kind of the most glaring hypocrisy to see somebody like Apple's CEO tell everybody they won't give the keys to de-lock and de-encrypt phones, and Chinese, hey, no problem. You want to unlock a phone? We'll give you everything. But where we live at home, we're not going to do it. So which one's right? I don't know. It's beyond my pay scale. But I do know that there's a world of difference between what they do in one place and another place, and which one's right. If you want to give me a call, weigh in, you can at 877-927-6648. Like I said, you don't have, normally when people are doing shady things, they don't go out on the street corner, stand on a soapbox, and start screaming it out loud. And that's what we have. Okay. Got some emails here for some other things, so we'll get back up on that. Did I get it? I get everything? I need to add that to my email list. Okay, get into some other ones. Let's take a quick look, MSFT. Let's look at some of these FANG stocks. I haven't spent a lot of time on them lately. They're all just kind of dancing up around the highs. Microsoft, as we said, this thing pretty much got back exactly where you want this gap to be. It came down on 38.5 million shares. And what'd you go up on? 71 million shares on the gap up on October 27th. So pretty much all the fact that you didn't like this huge, horrible down day, you do have kind of a nice up day out here. Not a lot of volume, but again, this is the way that markets work kind of into the end of the year, into 3-day weekends. And if you're new to TFNN, you need to know that sometimes you just kind of need to close your eyes on volumes. When volumes drastically decrease into 3-day weekends or into long vacations, that's one of the times where really the signal comes after the vacation. And in this case, for the most part, January 2nd or 3rd, you start seeing some kind of indication of what people want to do. Or at least this year, January 6th was the most heavily shorted day by a factor of about 3. We've never seen anything like that again. Everybody's been pretty much long this entire year. So it probably gives you an indication why when we do have pullbacks, they're not just kind of slides. They're kind of huge moves all at once like Microsoft has seen on this day. Fakebook, another one that was prostrating itself in front of the Chinese Communist Party last weekend. Not this weekend, but the weekend before this last weekend. Isn't that, I hate the way that terminology for last weekend and this weekend works in English. Would be better off doing it another way. Facebook kind of come back up with 3 soldiers gave a little reversal signal on Fridays to sideways today. Again, I'm not going to spend a lot of time saying that these things are going to pull off going into the end of the year. I do think, though, a lot of these companies are going to have a very hard time coming up with an idea on how they grow a great deal more last year. They had a great deal this year, but if the growth that they had this year is going to be anywhere close to next year, these guys are going to have to find new markets, and that means China. China has not been good about letting any company out there with any kind of huge cash. As soon as you start making cash, the hand starts coming out. They don't really believe on what their communist doctrine is. It's mostly, let's keep the cash. And that's a smart thing to do for a country, is be fairly hard at negotiations. And I think we just think that everybody's in one big kumbaya. I think going to the Chinese is kind of like going to the World Series poker's final table. You don't find a lot of slackers there, and if you're not a good poker player, you're probably going to go home in a barrel. Apple up today on a little bit. I've been worried about this company. Even Best Buy has been running ads on some of their products, including trade-ins on phones that they can't even get. So I keep on thinking that there's some issues with this one, and unless people really start changing, I don't think that there's a great deal of upside in the stock. I think people love it. So there's certainly not a lot of downside coming into the end of the year. And I think it get back up to 176 by the end of the year, but not from huge amounts of business. I've talked to a lot of people that have their new iPhone 10s, and the one thing that they like, of course, is battery life that they didn't get in the previous unit. We talked about why OLED or organic LEDs are so much more power efficient than regular LEDs screens are. So we won't go back through that. But if people are really looking for one major thing, it's probably going to be battery life in the 10. Maybe the iPhone 11 actually adds a lot of new features, but brilliant display and better battery life. But a lot of people are saying, well, actually my battery life's okay. I can live with what I got. And of course, these things are hard to get, and you have to pay up for them. It's kind of tough. So, one of the things I kind of think about if I was Apple is just how aggressive Samsung gets with the ads on actual download speeds for LTE, since the iPhone's only about 3/4 as fast on LTE networks as the Samsung. Samsung has not really pushed that yet, but between Samsung and Qualcomm, that's kind of a big marketing, a lot of room to kind of put the hurt on Apple, I think, from those two companies. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I got an email asking me what I think about Roku here, and I think it's this year's GoPro. In fact, that's probably the best explanation. GoPro, of course, said that they were going to start their own division, and it was going to be all about content. They were going to have their own YouTube channel. People were going to send videos. They were going to monetize those videos. Well, it never happened. It was a device company, and a device company alone. Roku is very close to that. It buys all its content. It does not make any of the content itself. But does it matter when you've got, well, the last time we checked in on Roku, it had 40% short of the float. So can you do the exact same thing that you do with GoPro and shove it up to a little over $100? It certainly could happen. We already have some noted short sellers all over this one, like Citron. So you can think that maybe these guys think that thing has hit its high. I think they may be a little bit early. But you always have to worry about one of these stocks that actually has a fairly, the business is probably not bad. It's just probably overpriced by 10 times. What we have seen is every single company involved in streaming media has gone from streaming media to owning its own content. Apple is going to spend somewhere around $3.5 billion in the next 12 calendar months creating their own content for Apple TV. Well, is Roku going to spend that kind of money, or are they only going to be able to stream out what other people have already done? And am I saying there's no business in there? No. But what I am saying is that, you know, when you get Amazon Prime for free, or Amazon Prime Video, when you get YouTube for free, the idea of probably paying for a lot of this stuff seems to me like it's, especially since some of this stuff has commercials in it already by other people, is a little far-fetched. If you paid and you got no commercials, I'd be a little bit happier camper on this. But just because you get ABC streaming doesn't make me feel any better about watching the commercials and still paying for the right to stream. It's kind of like cable, right? You pay for it, but you're still watching the commercials. The only difference is now you got a lot of people with competitive products and no commercials, and about the same amount a month, maybe $10. So is this GoPro? I think it's the closest one. Is it exactly like it? No, but it's probably fairly close. They make a device that sells for 35, 40, or $100, somewhere in that range. How much money can you make if the thing costs them absolutely zero, and they continue to make money on a subscription basis? I just don't think that you want to be the commodity distributor of content in the market and have prices, at least stock prices, like you have now. Maybe it'll pull back like GoPro. Maybe someone will figure out a way to make money, which they haven't in GoPro. But my argument, probably the same as Citron. Do you want to be a commodity distributor of content, or do you want to own your own content? Everybody else says they want to own their own content. Roku is kind of the one stock that doesn't. What if they do start spending 3, 5, 10 billion a year to make their own content? What does that do to the stock price of Roku? Anyway, just some thoughts, random thoughts out here. Let's look at a few other stocks. Look at Netflix real quick, NFLX. Again, Netflix pretty much ruling its roost by controlling its own content. Is this as good as it gets? I think there's going to be a lot more competition in this sector too. But, you know, if you want to watch BoJack Horseman, which I do, do you just get this stuff for a month and then cancel your subscription like I did, just because there's not that much other stuff that I want to watch on it? Amazon Prime, well, I already pay for Prime already, so no big deal on that. Apple TV, well, you're already paying for that. Does it cost a little bit more to get their content? Maybe it's something you want to watch, maybe it's not. But again, I mean, there's another company called Crackle that probably comes close to distributing content and putting commercials in, but it doesn't sell a device. But again, you can go to Google and get their streaming device for $25, or you can go to Amazon and get their streaming device, Amazon Fire, for $25 or $30. So what is the difference between those and other companies other than it's kind of like a Hulu? But guess what? If you get Hulu, you can use Amazon Prime's Fire Stick, or you can use Google's Chromecast. So again, I don't find the overwhelming need to be in Roku or own one, but maybe some other people will call in and tell me why it's the best thing since sliced bread. Okay, so we've looked at Netflix, we looked at Amazon. Oh, we haven't looked at Amazon yet. Wait. Take a look and see what Mr. Amazon's doing today. Of course, it gapped back up, getting a lot of negative press over the weekend of slave labor, but doesn't seem to be bothering it too much today, doing about what the market is. Light volume sideways action. Again, Amazon probably more important about what antitrust does in the future years. Other than that, everything is coming up roses for these guys. My guess is it will come out of the blue. No one will be expecting it. We'll start seeing some kind of fight over what Amazon does. Literally, there's nothing Amazon runs into tangentially to their business that they don't think that they can overtake. And we talked a little bit about it on Friday with Tom O'Brien. They are going to get into the YouTube business, and it looks like that's going to be somewhere around March. We brought up YouTube in that conversation too, and a lot of people that make some of the better content for YouTube, Smarter Every Day, I love that channel. What else is there's a handful of other ones that are really neat that I subscribe to. To me, the question is, do these people that actually their model is based on subscriptions, YouTube continues to screw them over. My question is, what if Amazon comes in and offers a much better deal? How quickly do these guys, and how quickly can these guys move their content from one platform to another. I think it's fairly quick, but we only have about 2 or 3 months before at least the rumors say that Google's YouTube platform, or excuse me, Amazon's YouTube platform is going to come out. Okay, so Google's kind of up on light volume out here today. Again, I don't see a lot of these things doing anything other than drifting up to the end of the year on lighter volume. And of course, what you don't want to see is these things just drift up lighter to the first of the year and see a lot of people jump in with both feet like 2 years ago and destroy kind of January. We've gotten the first kind of trough of sector rotation. Question is, what's going to be the sector rotation come January? We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Meow!
And we have one last email, so we'll get to this at the end of the day. And that is Snap. Has my opinion changed at all what I sell right now? And the answer is no. Like I said last week, we're going into options expiration. And this stock is perpetually for 3 months been 50% short. It's very tough to think that once you get a trend that reverses in these things, every time someone shorts a stock, it actually makes the float bigger. And the float isn't that big in Snap to begin with, but it's half shorted. That means that actually you have 50% more shares in the market. As it goes up, you've got two factors that make the float non-linear. Actually, as each share is bought back, it makes it even tougher for people on the short side to work out. And of course, the first thing is the weakest shorts start covering. Then you get the kind of medium shorts. You're probably not going to get the long-term shorts to bail on Snap. They're probably short up in the 20s or higher. But I wouldn't be surprised to see everybody that was certainly short below 16 or 17 bucks short before this goes out. The question is, how fast can this go? Well, you're going to need more people to short this thing once it gets above 17 bucks. And it's just not something that happens a lot going into Christmas. I think you're probably looking at 17 bucks for Friday, or between now and Friday. So you probably have one more big move in Snap between now and the end of the year. Could you see 19 bucks? You could. These things tend to be like wildfires, and they expand. And the higher it goes, the more shorts that cover, and that means that more shorts have to cover. So what they call a feedback loop develops until you get some people willing to sit on the stock again. But for me, if you're along this thing, that in the 17 buck range, probably going to see it in the next couple of days, I would imagine. One more day. You've got a lot of people that need to cover. Well, that's, as I always said, sell when you can, not when you have to. See you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.